It's another week on Business Morning. Good morning and welcome. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for joining us. We kickstart with a global oil market update as prices rose this morning as a slow return of U.S. crude output that was caught by frigid conditions raised concerns about supply just as demand is coming back from the depths of the coronavirus pandemic. Brent crude was up 76 cents at $61.67 a barrel after gaining nearly 1% last week. U.S. oil rose 74 cents to $59.98 a barrel, having fallen 0.4% last week. Abnormally cold weather in Texas and the plain states forced the shutdown of up to 4 million barrels per day of crude production, along with 21 billion cubic feet of natural gas output. Oil-field crews will likely take several days to de-ice valves and restart systems and begin oil and gas output. U.S. Gulf Coast refiners are assessing damage to facilities and may take up to 3 weeks to restore most of their operations, with low water pressure, gas and power losses hampering restarts. For the first time since November, U.S. drilling companies cut the number of oil rigs operating due to the cold and snow enveloping Texas, New Mexico, and other energy-producing centers.
And back here, last week saw a week of major data releases. The fourth quarter GDP numbers released by the National Bureau of Statistics shows that the Nigerian economy recorded a positive GDP growth rate of 0.11%, that's year on year, in the fourth quarter of 2020. That's after 2 consecutive quarters of negative growth, meaning that the economy is technically out of recession. Its 2020 full-year GDP growth rate stood at minus 1.92%, which implies an exit from recession. Now, the surprise recovery was driven by the resumption in most business activities. The number of sectors that expanded increased from 14 in the second quarter of 2020 to 21 in the third quarter of 2020, and of course 29 in the fourth quarter of 2020. The fourth quarter is typically the fastest growing quarter in the year due to increased consumer spending during the festive period. Also, according to the National Bureau of Statistics, Nigeria's Consumer Price Index, which measures inflation, rose by 16.47% in January 2021, an increase of 0.71% points higher than the 15.75% recorded in December 2020. The report also noted that food inflation also rose to 20.57% in January 2021 and from 19.56% in December 2020. The rise in the food index was attributed to increases in prices of bread and cereals, potatoes, yam and other tubers, meat, fruits, vegetables, fish, and oils and fats. Core inflation, which excludes the prices of volatile agricultural produce, stood at 11.85% in January 2021, an increase of 0.48% from 11.37% recorded in December 2020.
A document put together by the Bureau of Public Enterprises and submitted to the National Assembly shows that the federal government plans to earn a total of 493.4 billion naira from the sale or concession of about 36 of its assets across the country. Some of the assets up for sale or concession include the nation's refineries, the International Conference Center in Abuja, Yola Electricity Distribution Company, Nzungeru Hydropower, Tafawa Balewa Square, and others. The proceeds of the sales of the selected properties would be used to fund the year's budget. Meanwhile, the CBN, in its latest monthly economic report for November 2020, noted that deposit money banks and merchant banks continue to access the standard facilities window to square liquidity positions in November 2020. Furthermore, it reported that the trend at the CBN standing facilities window showed more frequency at the standing deposit facility window compared with standing lending facility due to the banking system liquidity surfeit.
And talking about the GDP numbers released last week, agriculture is one of the sectors that drove the modest growth rate we saw in the fourth quarter of GDP, with the sector up 3.4%, contributing about 26.95% to the overall GDP in the fourth quarter. And where did that growth come from? Mr. African Farmer Mogaji, the chairman, Agri Group of the Lagos Chamber of Commerce and Industry, joins us next. All right, we're now being joined by Mr. African Farmer Mogaji. Thank you very much, Mr. African Farmer, for joining us on the program.
Thank you for having me.
Good morning, great to have you.
Good morning.
Same here.
We're looking at the entire scenario of the sudden exit, from recession. Did that really come to you as a surprise?
Yes, it did. It came to us as a surprise because last year was very turbulent across board. There's no value chain that was not negatively impacted last year. So it did come to all practitioners, all practicing practitioners. Because in Nigeria, you have practitioners and you have practicing practitioners.
and you play in the agri sector. The sector recorded a growth rate of 1.39% in the third quarter and 3.4% in the fourth quarter. What do you think the government did differently?
I don't think it's the government. I think it's the private sector. Now, the opportunity, the reality that COVID presented to people, that food was priority and oil wasn't doing so well and other sectors was not doing well, stocks and coal. So we had an increase of new entrants into the agri sector. That's really what influenced what they call the growth.
Now, talking about those food, of course, and then new entrants. Remember, we had the issue of insecurity that really drove a lot of farmers out of their farms. There's also the issue of flood, which farmers were actually dealing with. So how now would you say, I mean, that actually could have been a negative for this sector, but we're seeing, it seems, this didn't really have much impact on the farm produce, because if you look at the subsectors that actually grew, crop production happens to be the number one.
Yeah.
So how did that happen? Are we going to attribute that to perhaps some of the interventions that the government have tried to put in place, particularly the anchor borrowers?
Yeah, I do not take it away from Anchor. Anchor has significantly improved participation as regards input and output in agri-business. But you see, I would like to put the conversation in proper perspective. The increase and growth in Q4, when you look at it vis-a-vis Q3, there's a decline. So if we look at it from that perspective that, okay, it grew, it was about 30% in Q3 and Q4 about 27%. That shows that there's something, but basically we had more people coming. The reality, was clear to everybody that they needed the agri sector to survive. Many people who couldn't access dollar was now investing in agriculture to be able to export to earn dollars. So for me, I would not celebrate this yet because people are rushing in and rushing out because the price of input is on the high. Like the poultry sector, as a Q2, what they were buying for 2,000 naira is now about 5,000 naira. So the players are not scaling. They are being very careful, but the new entrants have a lot of zeal. And so what we need to do is to look at how we can keep the zeal. If not, the next report may not be as encouraging as this.
Well, looking at the policies such as no access to Forex for maize importation, how did that help the growth?
It didn't help the growth. It actually affected the sector. And the practitioners, and I speak for the practitioners now, the people operating in the agribusiness, we all came to a conclusion when that ban to restrict Forex, it was a wrong move at the wrong time, but good intention. It was good intention, but the timing was wrong. And so, the price of maize was 65,000 naira per ton. It moved to 165,000 per ton in a space of 4 days. And this year it's over 200. So the advisors who advised on that actually ruined the livestock sector. And that's the truth. The livestock sector will still have like 2-3 quarters to get out of what exists currently, but good intention, but wrong timing. And why I say wrong timing also is because I'm not sure practitioners were the ones that advised. And that synergy is what is missing. Practitioners know, advisors do theory, and there's a place for both. So there needs to be synergy before you want, good intention in the sense that if we place restriction, it would encourage, it would trigger local production. But guess what? Whose economy was at stake? It's the middleman, the importer. So it's what the importer has. They just double the price or triple the price. So we should not send threats to the value chain when we want to help local production. We should bring everybody to the table and let's have a common interest.
You talked about encouraging the zeal because you said, well, it's not just about the policies perhaps government have put in place, but it's about people, seeing that perhaps food production is where to go, considering the challenges the economy experienced. Now, the president, at the beginning of this year, reiterated his directive to the central bank, not to grant foreign exchange to importers of food items and, of course, fertilizer. And you cannot talk about growing crop production without, fertilizer, which I believe we really don't have much of it. So how would this support growth in that sector? How would it actually encourage the zeal that you are talking about?
So you see, most of these policies and pronouncements, like I said, they are good. But when the pandemic struck and we were under lockdown, nose mask was not produced in Nigeria. So there was no ban on it, okay? And there's still no ban on it, even though now we are producing. So some people it's no longer profitable to bring nose masks into the country because the price of producing local is cheaper. So gradually, it just balanced out. Everybody is using locally produced without banning. So we must get the local production to a level where at least 30% of what is required can be sourced locally before we place restriction. Don't forget, the raw material is still even imported. So we need to balance it out and say, okay, put appropriate timing, 1 year, 2 year. It helps than sudden, because when it comes sudden, the only thing it does is to, spike up the price. But good intentions, but we've had too long good intentions without the private sector involvement. It's a marriage. Private sector and government, it's a marriage. And it's affecting new entrants because they're coming. The increase is as a result of funds that came into the sector. Will the fund, and it's mostly very expensive. Private sector fund is very expensive. So when the funds come in, will the funds stay? There will be low output again because when there's high insecurity, So yes, there will be development in the Southwest now in the agri space. But guess what? We need government to come and sit with us, the Chamber of Commerce, and other practitioners to get things done. They mean well, but we need to see good action.
Okay, 3.4%, that was what we recorded for the agri sector in the fourth quarter. Are you looking forward to a higher rate, and what do you see that would drive that rate, considering, okay, this policy that the government has put in place?
Well, sustainability is key. And if nothing changes, we're still going to have it go down because there's high level of insecurity. I can tell you from the field, many people are careful of going to the farms. So what's happening now is planting season is about to start and climate change is already setting in. Harmattan came suddenly. NIMET is on point with the projections. But guess what? Is we need government to allow private sector take that role and ask, what do you want? What do you need? The associations, once they put them together and say, and do what they need and not what you perceive them to need or want. You see, so it's inevitable that they may still have to grant access to some people to bring in some of these foods because we don't have enough. And climate change is global. Look at Texas now. So we may just restrict it to 1, 2, 3 companies, just like when they allowed people to bring in maize. They only gave a few companies that they can monitor. So, government working with private sector, seeking advice from private sector is what will sustain that. And election is coming. This year, you would have dynamics of election coming in. And so attention would move from making these things work to getting the next people in office. And so if we don't get the private sector to champion it now, it's going back down.
And we're looking at the border closures and reopening. How would you say it impacted food security in Nigeria at this point?
It didn't do so much. It didn't do so much because we were not prepared. We didn't have reserves of almost everything. So it didn't really have that positive effect because the price of local rice and the price of foreign rice was almost at the same price in the market. So, but there was increase in production. That product closure triggered opportunity, what I call opportunity fever, to private sector to moving in. So the good thing with the border closure is it triggered people to move in, but the platforms needed was not sustained.
Now, how do we make agriculture a business and create a better value chain in the agricultural sector going into this 2021?
When personally, I feel the banks, CBN needs to talk to the banks. They have funding, the bankers' committees have funding. We need to have some CSR going on. CSR in key, like seeds, CSR in mechanization. CSR of banks need to move from the you must see me to incubation, because they have the funding. So if they can appeal to them, the government can appeal to them to do more CSR because agric is always long-term. Government across the world, they are subsidizing one portion of agric, a value chain. Either output to take, buy, and go and store, or input. Input is not working for us. Output is likely where we should go. So we need the financial sector to do more CSR. They all have budgets for it annually. Do more CSR and fund. When agric was working in the 60s and the 70s, I was part of it, and I did a lot of research. The banks played a lot of roles. It was the private sector, not government. Government was fixing the road. Gracefully, they are fixing the road. The rail is very important. It's good direction, and we are all happy about that. But they should stay with what private sector cannot do. And then we would be able to achieve food sustainability.
All right, let's remain optimistic that it turns out better. I'm sure very soon we'll be expecting the first quarter 2021 numbers, so we'll see how that goes. Thank you very much, Mr. African Farmer. It's always a pleasure to have you on the show.
Thank you for having me.
Thank you.
And still on the GDP numbers, we'll be looking at the manufacturing sector next.
And the real GDP of the manufacturing sector contracted by 2.75% in 2020. This signals the end of a two-year run of the real growth in the sector. In 2019, the sector grew by 0.77%, and in 2018, it grew by 2.09%. The fourth quarter of 2020, the sector contracted by 1.51%. This contraction in the real GDP of the manufacturing sector, no doubt, leaves the sector in a vulnerable position. But let's get the take of the Manufacturers Association of Nigeria on this growth rate. We're being joined now by the Director General of the association, Mr. Segun Ajayi Kader. Hello, Mr. Ajayi. Thank you for joining us.
Thank you for having me.
Yeah. So what struck your mind when you first saw those GDP data for the manufacturing sector?
Well, that the Nigerian economy generally believed now to be out of recession, and the direct focus in the manufacturing sector, we have seen that there is a negative growth in that sector, minus 1.52 during the fourth quarter of last year. For us in manufacturing, this is not a satisfactory performance. It reflects generally what we did know, even from the manufacturers' confidence index that we conducted in the last quarter of 2020, which indicated that manufacturers, CEOs in manufacturing sector had a reduced confidence in the economy. It actually moved from 43.30% to 42.06%. So for us, the exit from recession does not leave us with a lot of comfort. It indicates that the performance of the manufacturing sector indicated that we still have the perennial challenges that have been with us have not gone away.
So, as an association, what was most challenging for your members, and what lessons did you learn from those 2020 experience?
Well, to start with, the problems that beset the sector in 2020 was more or less a global one. We had the COVID-19 pandemic, and of course, we had the challenge with the price of oil in the international market, which affected Nigeria specifically. And so there was reduced spending for government, for infrastructure, and so on and so forth. So for the manufacturing sector, we were worried, especially in the first 3 quarters. But since the lessening of the lockdown due to COVID-19, we saw some relief. And we felt that we were going to be able to quickly come out of those challenges. But the challenge of infrastructure, which has continued to bedevil the sector, defied all government arrangements to try to get the economy moving. Also, we had the serious challenge of forex to source our raw materials that are not locally available. Our raw materials, our spare parts, and our machines. We also had a situation where manufacturers who have managed to export could not have full access to the value of the foreign exchange that they are earning. Then, of course, we had towards the end of the year, the beginning of this year, we are having the challenge of increase in electricity tariff. We also had cost of abiding by the regulatory agencies' demands, which slowed down our production. We also had the challenge of constrained consumer spending, which is due to maybe non-payment of salaries and so on and so forth. So we had some challenges in 2020 that we are hoping that government efforts and through our dialogue will be able to resolve, at least in the first quarter of this year.
Anyway, looking at government efforts, the government gave out some palliatives as a result of the pandemic. How much impact did that have on your members' businesses?
Well, we need to interrogate that. On paper, yes, they exist. But in terms of our members' capacity to access it, it's a different ballgame entirely. During the lockdown, we had some agreement with government that enabled 2 sectors out of 10 sectors to operate. So the food and beverage and then the pharmaceuticals were able to operate almost unhindered. And that was because it was supporting government effort. But in other sectors, we had serious constraints. For instance, the CBN did put up a lot of funds. We have the 50 billion support, for instance, for the textile sector. As we speak, none of our members have been able to report appreciable access to that fund. The commercial banks have continued to use procedural challenges, and that there has been no clear guidelines from the CBN. We also have the 350 billion textile funds, textile garment funds that they ought to have access. The story is still the same. And even for the palliatives that we mentioned, our members have found it difficult. And we have approached the CBN that these are funds that should be utilized and time-bound. We have one, for instance, that we will be able to access at 5% up to the end of February. As we speak, and we are just a week away to the end of February, our members are not able to access it. And after February, it will jump to 9%. So on paper, like I said, we have some of these measures that are well-intentioned, but for some reasons, due to the reluctance of the commercial bank, I think I need to put it squarely, we've not been able to access the funds. And the central bank has not been able to rein in those erring banks to allow manufacturers to be able to benefit from those funds.
Now, for you as an association, I mean, what you have just said, you know, that you've not been able to access some of these funds that were approved, and they're sort of palliative for your members. What are you doing as an association? Have you been able to engage the central bank on this?
Yes, we have, and the process is still on. We have met with the CBN governor, and we have written severally to him, appealing to him to rein in these banks so that we'll be able to overcome these challenges. But up till now, we have not succeeded to have a positive response. We do know that there are indications that the CBN is making a lot of efforts to see that the banks comply and these governments are removed. But it is not just happening. And of course, there is a limit to what you can do if the banks are not willing to support the sector. They see the sector as a high-risk sector. And we have always said that it is very difficult to even get the banks who are borrowing short to lend long. But these are funds that have been set aside by government. It has been announced as government policy. So the first banker in Nigeria should be able to get these banks, to do the right thing. We have seen them succeed to abide by other regulations by the CBN. So this one should not be an exception.
Anyway, the optimum productivity of the manufacturing and industrial sector is said to be key for other sectors to reap optimal gains in 2021. Looking at some of the reforms introduced by the federal government, we have the removal of subsidy, the cost reflective tariff, and the CAMA 2020. How do you see these driving growth?
Well, ordinarily, we should have, as a matter of fact, manufacturers are optimistic that the year 2021 should be a year that we should witness more contribution to GDP and we should witness some growth. But in terms of policy support, if I may single out one dimension, which is in terms of getting cost-reflective tariff, which cost is being reflected? Mm-hmm. The cost that is as a result of the inefficiency and the ineffectiveness of the discos that you are paying for. You can't pay for incompetence and say you are reflecting cost. First, we don't have power. And secondly, we are not metered. So we pay for the power we don't consume. So I think that there has to be sincerity on the part of the discos and government for us to be able to identify, especially the manufacturing sector, as a sector that needed to be supported for growth. It is not, I've always said that industrialization is not something you achieve by profession. It is a choice. The country has to make up its mind whether it wants to industrialize or not, and then choose to implement policies that will be geared towards reviving the sector and pursuing it to the letter. You cannot throw out policies that at the end of the day will be reporting no effect at the end of the year. So we are seeking to engage government, and there are several platforms that we have been engaging government. We have good prospects that this year it's going to be better, but I just hope that it doesn't end up like the promise we had from the beginning of 2020.
Right. Okay. Now, central bank has always talked about encouraging you manufacturers to do to backward, integrate and also to support the currency market. And yes, you talked about the issue of the foreign exchange, but then some analysts have accused the manufacturers as being too dependent on imported raw materials, and this is why many of them are not competitive. How would you react to this?
Well, thank you very much for that question, and I think it gives me an opportunity to be able to share some misconceptions. As a manufacturer, it is extremely difficult for you to import your raw materials. It will take you about 2 to 3 to 4 weeks to get your containers out of the ports from the time you are informed that your containers have landed. It will also take you a lot of money. I repeatedly said it that it takes about the same amount to get a 40-foot container from China to Apapa, and the same thing to get it from Apapa to Agbara. So naturally, no one will be interested in importing what can be sourced locally. But you must understand that a manufacturer's need has to be met in terms of raw material for him to be able to produce. So if, for instance, you are saying that we should source milk locally and not import, what you are saying is that you need to be able to have some level of local production that will allow your factory to run every day. But in a situation where the local supply is not enough to keep your factory running, and you can't do contract manufacturing, or you cannot shut down 3 months, produce 3 months in a year, and you have to be paying your workers. So there has to be commensurate local production of raw materials for you to be able to use in your industry. As an association, we had more than 5 years ago launched what we call resource-based industrialization, which deliberately encourages our members to source their raw materials locally. We are cooperating with the Raw Material Research and Development Council, and we have an MOU with them. We are actively promoting the backward integration policy of government. But this has to be done for products that you can source locally. For those ones that you cannot source locally, except you're asking the industries to close down, you must import. This is what we are saying. We are not supporting permanent dependency on importation of raw materials. No, I mean, that would be very unpatriotic. And Manufacturers Association of Nigeria does not do anything that is not in the interest of Nigeria. So we actively support government's backward integration, but we must be realistic and know that we cannot achieve this in one day, and that when we identify those areas where we can source our raw materials locally, we require government support to mitigate those factors that have in the first instance made it difficult for us to source those raw materials. Already now, manufacturers are turning into farmers. We are beginning to grow cows in order to be able to source our raw material. Government should directly incentivize investment in those other aspects of agriculture, for instance, that the manufacturers can offtake from. I mean, that is how it is done in countries that have succeeded or have made progress in backward.
All right, Mr. Kodeh. All right,
we
Mr.
support
Kodeh.
government effort, but we must be realistic as to what is achievable.
All right, Mr. Kodeh, what's your outlook for the first quarter for this manufacturing sector?
Beg your pardon?
What is your expectation for the first quarter for the manufacturing sector?
Well, yes, we look forward to improved performance of the manufacturing sector. Our manufacturers' CEOs' confidence index did indicate that after the fourth quarter of last year, we are looking at the next 3 months, that's the first quarter of 2021, with optimism. We have identified areas that needed to be improved upon. Our production and distribution costs, for instance, increased by 31% in the last quarter of last year. Our capacity utilization dropped by 24%, and there was decline in manufacturing productivity by 26%. We have since communicated to government steps that needed to be taken to reverse these trends. So we are in consultation with government, and we are looking to those measures being implemented. Throughout January, we were in consultation with the Minister of Industry, Trade and Investment. They are coordinating the intervention of other ministries that will be able to help the sector. Okay. So we are looking with optimism, and we have assurances that the economy might not be shut down, which will mean that we'll be able to put our acts together and do what we have to do to make sure that we have a better output. As far as the economy is concerned, I think that government realizes that it is critically important with the security challenges we are having, with the anxieties that is evident in the environment, that all those economic policies that have been put in place to make us to recover from recession and to make us to overcome the challenge of COVID-19 and so on should be put in top, so that as the private sector, we should be able to contribute to.
Okay, thank you very much. Thank you very much, Mr. Ajayi Kadiri. Thank you. We do appreciate your time, and we share in your optimism. Let's see how that goes. Okay, and now let's talk about the markets, and we have Eddie on board. Hello, Eddie. It was red last week. Wondering what this week would look like. People are ready to buy the dip, right?
Good morning, Jimmy. All right. The third consecutive weekly decline in the market yesterday, and it was, largely due to sell-offs in Stanbic, IBTC, BOA Cement, MTN Nigeria. Also due to the rising yields in the fixed income space. At the bond auction on Wednesday, we saw average yield rise by about 254 basis points, so about 11%, from 8% in the last auction. So one of the PFA players I spoke with over the weekend said right now they're all just waiting to see what happens in the market and how high the yield in the fixed income space will go so that they know where to put their money. But let's talk to Charles Fakuga, the Chief Operating Officer at Super Commercial Trust, for more on the markets. Good morning, Mr. Fakuga. Thank you for joining us on the program.
Thank you. Good morning for having me.
Well, analysts expect a flood of earnings in the market this week, and some proposed dividends. Should we be expecting that to, douse the negative sentiment we've been seeing in the market lately?
Yes, I agree with that narration. As we expect more of the numbers coming to the market, and of course the companies proposing dividends, we see that is likely going to change the direction of the market. So we are positive. But at the same time, investors also want to calculate the yield from this proposed dividend and yield in other asset class. And whichever is favorable, we'll see investors rebalancing their portfolio and getting to those asset classes. In a nutshell, we'll be seeing more and more investors rebalancing and coming to the equities market.
All right, Mr. Fakuga, we'll be looking forward to some positive sentiments in the market. Do enjoy the rest of your day. Charles Fakuga is the Chief Operating Officer at Super Commercial Trust. But before we go on the break, we'll just quickly look through what the market was like last week. It was down 0.63%. Now, we've year-to-date returns have gone into the negative territory. As of January, we had 5% interest, or rather, the market was up 5% in January, but now we've gone to about 0.21%. Volume value deals traded were lower last week, while the sectoral performance was largely negative. Ochimi, just like Mr. Fakuga said, we'll keep our fingers crossed and wait for those investors to come in into the market this week.
Absolutely. So we'll wait and see. It's just the first trading day in the new week, so we'll see how that goes, if those investors will come back and perhaps take position. But I suspect even taking position, they might just have to take quick profits again, considering what's happening in the fixed income market. But we'll wait and see what happens. Okay, we take a break, and when we come back, we cross over to London. It's Monday morning. Let's get the feel of what's happening in London. Let's talk to Juliana. Good morning, Juliana. Good to see you. A beautiful week to you. Well, all schools in England are expected to reopen on March 8 as part of the Prime Minister's cautious 4-part plan to lift the coronavirus lockdown. Now, Boris Johnson will share his finalized roadmap later. What are the other plans?
Good morning, Chimazee. It's really difficult to convey just how much of a massive day it is here in Britain, predominantly England, and that's because lockdown is lifting. This is the third national lockdown Britain has been in, and this particular one we've been in since about the 18th of December. And, you know, this hasn't been a soft lockdown. Everything has been closed. So everybody has been waiting for Prime Minister Johnson to reveal the roadmap out of lockdown. As to be expected, there is so much speculation in the press. What we are expecting is for him to speak in front of lawmakers at 3:30 in the House of Commons, and then he'll address the nation with a parliamentary speech at 7 p.m. We know that schools will open on the 8th of March. What we also think will happen on that day is for the first time this year, it will be legal for you to meet with another friend outside in a park for a coffee, for a catch-up. Then we're expecting by the end of next month, so in another 5 or 6 weeks, for 2 households or up to 6 people to meet outdoors. We're also expecting sporting activities outdoors to be open. As you said, you know, this is a cautious reopening. So far, the UK have vaccinated up to 18 million people. They don't want to mess this up at this crucial stage. So it will be a slow opening. But, you know, like I said, it really is difficult to convey just how much excitement there is because we have been pent up for so long. We know the economy is in tatters. So, yes, you know, all eyes will be glued into that address at 3:30 local time today.
Okay, and in corporate news this morning, John Lewis is understood to be considering a fresh round of store closures. Now, this is less than 8 months after it announced the closure of 8 stores to cope with the impact of coronavirus. What else are we hearing about this?
Yeah, well, this is another major blow to the high street. You already lost the stalwarts being Debenhams and the Arcadia Group. And now there are suggestions that John Lewis, one of the oldest department stores in the UK, will be making another further 8 closures. They already made 8 store closures a couple of months ago. And with that, about 1,500 jobs went. And in addition to the 1,500 jobs on the shop floor, we know that 1,600 to 1,800 jobs went in the head office. Just like other retailers in the UK, they've been struggling. They've already projected that by 2025, 80% of their sales will be coming online. We don't know if this is full concrete conclusion yet. I believe their end of year sales will be reported on about the 11th of March, and that's where we're expected to hear whether or not these stores will close. With it, another 2,000 jobs could go. There was a report last week suggesting that already in retail, 184,000 jobs have gone during the lockdown and 16,500 stores have closed up and down the length and breadth of the UK. So it's not great, particularly as John Lewis is such a household name here in this country.
Well, it's a new day and a new week. Aside from the coronavirus lockdown reopening issues, what else is on the calendar for the week?
Yeah, well, we're expecting unemployment figures tomorrow. That's a big one. We're getting the unemployment figures for December. I think the last, as it stands at the moment, it's about 5.1%, not projected to go any higher. I think the forecast is between 5.2, 5.3%, so practically flat. And that's really all to do with the fantastic furlough scheme. The government have been paying people to stay at home. Obviously, when the plug is pulled on that, we're expecting to have a tsunami of job losses. We've not seen that yet. And then I believe on Friday, we're going to be getting car manufacturing details for January. The last one we had was pretty abysmal, showing that it had declined by about 26% on the year, although this is going to be in the month. And I think we're expecting about an 18.2% decline. Lots of that is down to Brexit. We didn't get that Brexit deal until Christmas Eve. So production and manufacturing in this country was pretty much on hold until then. So, yes, those are the two we're expecting. But, of course, all eyes on lockdown.
Well, we'll look forward to that. All right, I'll talk to you later in the day. And then to the cryptocurrency market. Well, Ladi, Bitcoin racing to 60K. But what was it that Elon Musk was saying this morning about the price?
Well, Elon Musk was talking about Bitcoin and Ethereum price being too high, but we don't know what he's trying to say there. Maybe he has made a profit on his investment.
Remember, that's $1 billion already.
Exactly.
Yeah.
Analysts say he's made up to $1 billion on his $1.5 billion investment.
Perhaps his statement tapered Bitcoin a bit this morning.
And I feel you should have followed You should have followed his purchase at that time. You would be in profit right now.
I don't have that mind yet.
Anyway, let's talk to Olumide Adesina, investment and financial market analyst. Hello, Olumide.
Yeah, hello, Ladi. Yeah.
Hello, great to have you.
Yeah,
So Olumide, we know about Bitcoin being the king of the crypto market, but we also have altcoins. And in those altcoins, some of them are money grabs, scams. How do we pick the quality projects that can bring us profit?
Yeah, very good question, Ladi. The same fundamentals that drive key financial markets are also the same things that drive. And the key metrics to look at is first, you look at the white paper. The white paper is a kind of operational model that governs those crypto assets, tells you what the crypto asset was designed for, its functionality, and the people behind it. Like any investment asset, you must know the people behind. So there are top computer programmers that have a very good reputation in the cryptoverse. So the liquidity around those assets are usually high. Take example, Ethereum, Cardano, Monero, and Polkadot. The recent highs, they've been going through breaking a record because of the unique features they have. Then another thing you need to look at, like any other financial asset, is liquidity. Liquidity means how quick it's readily available for purchase and sell. And so usually the top 20 crypto assets have very good fundamentals because they are so liquid. They are traded virtually on every crypto exchange. Another key factor you need to look at is also their unique uses. Some are used for in Africa, like Cardano, farmers make payments simple. So this simple feature attracts a certain region. And the cost, Cardano is just about $1. So a lot of Africans see it as something very affordable. And the blockchain is very unique. And also, if you look at Ethereum too is we call it the utility crypto because a lot of other crypto assets are built on that. So basically, it's just the same metrics you use for other financial assets. But listeners need to be aware that
that's all we can take at this time, Olumide. Thank you so much.
Okay.
That's all we can take. I'll have you again some other day. You can break it down for us. Thank you for joining us.
Cool.
All right, Chimi. So the market cap at $1.704 trillion, 24-hour volume $1.5 billion, down 17%. Bitcoin dominance 61.43%. Bitcoin price as of this morning $56,232. So it's still trying to break that 60K. We have our top 5 gainers. Pundi X, that's been down for a while, up 52% this morning. Phantom. So the altcoins are looking good, Chimi, but we'll see how it goes for this week.
Yeah, maybe we'll begin to consider those altcoins. But the only one I can actually remember is the Doge, the Ethereum,
Dogecoin, yeah,
and all of that. Well, perhaps I'll seek more consultations for that. And for Bitcoin, I wonder where it's racing. Perhaps I might agree with you that maybe before the end of 2021, we might just see it hitting 100K.
100K.
All right, we'll see how that goes. And that's it on the program. Thank you for watching. I'm Chimezie Obi Iwagu.
And I'm Ladi Williams. Thank you for watching.